Welcome to The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate the space together. Before we get started with the show, I want to thank our friends and sponsors over at Prime XPT, where many of our listeners have already signed up to trade by visiting the birbnest.com/PrimeXPT. Prime XPT is the most powerful trading platform offering immediate access to over 30 assets. Users may trade cryptocurrencies, Forex, commodities, stock indices, and much more, all from a single Bitcoin-settled account.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Birb.
And now for the show. What The Nest Show is. This is a podcast brought to you by the Birb Nest community, an independent crypto and Forex-centered trading community built to sharpen each other in capturing opportunities in the markets while protecting capital along the way. What this is not: trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions.
Hey everybody, it's Adrian, it's Crypto Birb here, and welcome to today's episode of the Nest Show podcast. And today we're joined by an amazing guest, by a person who's truly inspiring to the crowds, to the many people in the cryptocurrency industry and beyond. And I'm very happy to be hosting Simon Dedic today. How is it going, Simon?
Hi there, Birb. Thanks for having me. I'm super excited to be on.
Awesome. Likewise, I'm very excited. For you being the managing partner of Moonrock Capital, being the overall blockchain and crypto enthusiast, right? The Bitcoin and altcoin trader, could you tell me and our viewers, our listeners, a little bit more about your story, about what Moonrock Capital presents to the people, to the institutions, to the clients? Could you shed a bit more light on your background?
Yeah, sure. As you already mentioned, I'm the managing partner of Moonrock Capital, which is basically like a venture capital fund that focuses on token and equity investments, as well as the incubation and acceleration of early stage crypto and blockchain startups. I would say we are rather new to the space compared to some other big players. So I think we started something like 2 years ago, but we are growing quickly and we are already building a nice track record. I would say we don't really have a particular investment thesis per se. As long as the project is promising and in the crypto and blockchain space, obviously, we're always open to have a look and to invest in it. But however, the market is obviously pretty much narrative driven. So we are also watching the market, and thus we recently mostly invested into DeFi, Polkadot ecosystem projects and NFTs. Regarding my background, I actually have a rather unconventional background for someone being full-time crypto. I actually studied biology. I always wanted to be a tumor researcher, / professor or something, right? So I even started my PhD in tumor immunology. And but
that's amazing. That's amazing to hear. Actually, we already have a lot of in common, because I'm a chemical technology engineer, and chemistry and technology is quite correlated, right?
Yeah, that's amazing. My PhD was also mostly biochemistry related. So, obviously.
So let's make it a chemical podcast, right?
Yeah, 100%.
I love it.
When chemical coin, right? But maybe it was the same for you, but I love the theory behind all that stuff, right? And the whole science stuff. But I quickly realized that it's not really what I wanted to do for the rest of my life on a daily basis. I always invested into crypto personally, just as a private investor, since the beginning of 2017, I believe. I was always fascinated by the space and also by the technology and all the whole spirit in the space. And at some point, I met Jonathan and Alex, like my two partners at Moonrock Capital, and we were all like kind of like in the same boat. We were all like super excited about crypto, dreaming about like a career in crypto, and also like not too happy with our jobs. So at some point, we decided to quit our jobs and to go full-time crypto. That's when I dropped out of my PhD. And this is when we started with BlockFire, actually. I mean, which might, like one or the other might still remember BlockFire. And it was like basically like a research house where we issued like research reports about promising and interesting crypto projects. We were deep diving into like the technology, token economics, etc., and eventually indicating whether we believe the token has like growth potential or not, right? And within the scope of BlockFire, we also often work like with the projects teams themselves, and because we requested some information or like we wanted to double check whether we are like stating correct information. And that's when we quickly realized that they also often ask for advice, actually. And many of the teams actually rather come like from the traditional space and want to build like that technology and want to focus on that, right? Which is fair enough. But most of them actually have no clue like about the crypto side of the business, and they don't really know how to handle this unconventional crypto Wild West, which it still is, right, to some extent. And so we started advising projects, helping them out like with our connection, and this is basically when we founded Moonrock Capital. And there we tried to come in like at an early stage. And we invest obviously our own capital, and then we try to help them out like wherever we can, maybe with advice on token metrics or token economics and connections to like exchanges or marketing agencies. As we obviously grew like a great network over the last years, doing like the marketing strategy for them, the go-to market strategy, and all that stuff basically. And it has shown that it's like a great business model because it's just like a win-win situation for both sides. I mean, we obviously have great upside potential. We are able to influence like the success of our own investments, right? And for the crypto startups, we are basically just like free working force.
I love it. I love it. There's been a lot of good details, and I think what definitely sort of like is inspiring about it is the breadth, the sort of like the width, the amount of interest that you're actually having, right? Starting from the biology through the biochemistry, right?
Yeah.
Or the chemical biology, you name that, towards the actual investing, but also just dealing with with institutions, with the institutional clients, right? Be the companies, right, which are actually coming to be supported by Moonrock Capital, right, on the incubation basis. But also as a trader and as an investor, right, you are directly sort of like correlated with the market. Could you tell me a little bit more, of course, if it doesn't come out as a secret, about your thoughts, over 2021, but from the institution point of view?
I mean, I think this is like a super interesting topic actually, and I think also like a pretty relevant one, and because I think institutions like since 2020 like kind of feel like to some extent some kind of FOMO, right? And I think sadly this all started like with Corona in last March, and where we all like first had like the panic dumping, and then like, I mean, also like in traditional markets, right? And this is like when the Fed or I mean like basically all governments just started to like hyper print money, inflate the market with it. So actually everyone who knows or like who isn't like completely blind and following the market knows that there's like an inflation coming, at least to a certain extent. And plus like looking for like a store of value, right? And trying to preserve their wealth. And I think like I mean, most obviously know that like Michael Saylor and MicroStrategy started like this great institutional trend by putting their treasury into Bitcoin, but also being so public about it, and also being so advocative about it. And because like Michael Saylor obviously is like a well-spoken guy, and I think he's like really a crucial factor who kickstarted this institution of FOMO, or at least was like encouraging other institutions like to follow him. And
best greetings from the Nest show to the Michael Saylor.
Sorry, again?
I'm saying best regards and best greetings to Michael Saylor from our podcast.
Totally. If Michael Saylor is listening to it, like great fan here. I mean, feel free to reach out. I would love to talk to him. And yeah, I mean, then maybe the most insane news for me personally, and most probably also for many others, was like Tesla stepping into the game, right? And like one of the biggest companies in the world throwing their treasury in, and also being like so public about it. And I mean, Elon Musk was always like memeing around with Doge and also to some extent with Bitcoin. So I guess people were anticipating it, but it was great to have it like as a final confirmation. And I think this is like the big difference that we are having in 2020 and 2021 compared like to 2017. In 2017, it was just like retail FOMO, right? So it was just like Reddit investors and Twitter investors like shilling it all over the place and throwing their pocket money into it. But now it's like actual institutions and like kind of billionaires FOMOing, right? And being also so public about it. And I think this is very important because of two reasons. Firstly, they have like a whole other time horizon, right? And it's not like they are gambling with their treasury money, like billions of dollars, right? And looking for a quick flip, but they actually properly research it. They do their due diligence, and eventually they actually believe in Bitcoin and decentralization as a concept, and entering at it as like a store of value and with a long-term perspective. And secondly, I think regardless of retail investors or institutions, I think many people out there still think like crypto is kind of a scam and the currency to buy like drugs and weapons on Silk Road, right? But now actually like the richest man in the world stepping into crypto, and also institutions FOMOing in, doesn't only give like huge exposure to crypto and to the non-crypto people, but it's also building like huge trust amongst these people, and decriminalizes it for them to a certain extent.
Yeah, I love it. I mean, this is pretty much like, or actually printing the confirmation behind all my thoughts and all my sort of like, market commentaries and ratings. Most importantly, the main difference I believe, is between 2017 rally and 2020-21 rally is actually the infrastructure. And by the infrastructure, I mean the legal infrastructure, the security, right? Because the truth is that most of the people, most of the institutions didn't have enough of an infrastructure available in the place to enter back in 2017, right? This was this was new, this was unconfirmed, this was not proven like legit, so you couldn't expect back then, all those institutions, Elon Musk's, Teslas, and everything, just participating in the market, because you were not having enough of this sort of like an approval from the regulatory point of view. So now that this has changed over the time, we are seeing sort of like a role change. The demography changed in the market participants, the market structure changed, because, as I said, 2017 was mainly retail driven, pretty much confirming what you just shared. 2020-21 is purely institutions driven. And institutions, it's actually very, very interesting, but most of the hedge funds, most of the funds, investment funds, they underperform against the markets. They underperform against the averages, right? And you see many hedge fund managers being sort of like pressed. Hedge fund is like a regular operating company, and they would have like the bosses, the boards. They would have the presidents, the CEOs. I mean the CIOs. and so on and so forth. So this entire structure puts the pressure on the shoulders of hedge funds managers, which usually, they are sort of like told to, to just press, right, to keep delivering the numbers, to keep boosting the numbers. And they not only make, human mistakes about sort of like, human errors about decisions, whether or not to exit or enter a given market, at one point, but also this altogether is what is forcing them and pushing them to join late as well, and you would see lots more, a lot of more hedge funds, a lot of more, just funds, the trust, getting more and more interested in the crypto, because that's what people sort of like require, right? People who are, the institutional clients who need the exposure, the funds as well, right? Who need exposure, sudden exposure to crypto market. They would go to the people and brands like Michael Saylor. They would go, to for example, like CME would just open for the request, the Ethereum ETFs, right? So, or like in general, like for was it CME? I'm not sure if it was CME. I'm talking about those recent. Just not to confuse. I'm talking about this recent addition of like on the Ethereum contracts, right? I think that was the futures contracts listed on the CME, if I'm not mistaken.
Yeah, exactly.
Yeah. So on top of it, as I'm saying, you're going to see a lot of more ETFs. The passively managed funds. You're going to see a lot of more funds, and they are sort of like the doors. They are like the portals. Like the doors through which the mainstream can actually get in, and that's what they will keep appearing. That's why the liquidity will increase in the market. And in a couple of minutes, I'm actually going to screen share a chart, for a second, that I think is going to be extremely important from the institutional and sort of like non-institutional point of view, that will help our listeners and viewers pretty much like decide about where we are, regarding the market context. But before I do so, I want to sort of like get some better understanding, for our viewers, for our listeners, that you, Simon, being the managing partner for Moonrock Capital, dealing with all those institutions, dealing with all those, just the market trends reading. I know some of that is definitely, just confidential, so I'm not going to pull your tongue over here. But could you just reveal and spill some beans, over what indicators, what tools, you guys are using? Like what type of indicators you're tracking? Is it sentiment? Is it technical? Is it fundamentals? How is it?
So I think like the good news for the listeners is that we don't have like a big secret or something, right? Or like a secret I don't know. I mean, the good thing is as I mentioned before, we also started like as just private retail investors, right? So something that is trending usually only is trending because people think it's trending, right? So which usually happens via word of mouth. So in my opinion, the most important indicator to identify trends is just like staying up to date on like all social channels and like being on Twitter and like 24/7 reading like the sentiment that is going on in the market, right? And to see what people talk about, what they like, what they get excited about, or also what not so much, right? And I think this is like a great advantage actually for us, that we don't see things not so much from an institutional perspective, but rather right from a retail perspective. And in addition, obviously it helps, right? If you build like a great network of smart people who know like where the wind is blowing, kind of. So you also not only like in the retail mass to see like where the sentiment is going and how it evolves, but also like kind of behind the scenes and like what people are talking about, what the next trend is most likely to be. And this is what we are also like obviously combining with fundamental and technical research. So of course we are also like watching the charts. But I don't think we are like we don't have like any super great indicators that no one else out there has or something. And I think last but not least, I think the key is just time. And I think you just need to be willing to invest like 24/7 of your time to deep dive into like the fundamentals of projects, to deep dive into the topics. And because the more you stay up to date and informed like all the time, and the quicker you're also able to act. And time is obviously worth money in this market. And this is what I usually advise to people who are looking into like to enter crypto is, I mean, do you have the time and motivation to really like invest like all of your time into it? Because if not, the market is so like fast paced, and if they aren't like willing to be like really dedicated and time investing into this market, then it's most likely not worth it for them.
Yeah, greatly said. Greatly said. I couldn't agree more. There's so much money to be made right now, and it seems, for those who are joining, late on the market, it seems that the market can only go up, right? But as we are going to discuss in a minute or two, this will not necessarily be the case. I want to just quickly get a quick overview, your opinion, your evaluation over current market, like for Bitcoin, for DeFi, for altcoins. Like, what are your thoughts of all of that?
Yeah, that's like a tough question actually. But I think you already like asked it properly actually, because I think you need to split it up into like Bitcoin and altcoins, right? Bitcoin obviously is like kind of like the king asset in crypto, like the big store of value with like the biggest market dominance. And if fiat is entering the market, it most likely ends up into Bitcoin first, right? And I mean, personally, I obviously Bitcoin is performing very well lately, but I still think it's like pretty undervalued, especially given like this whole institutional trend, and also like this hyperinflation narrative, right? Where people are just like looking for like a store of value, and obviously Bitcoin is like the perfect asset for that, given its like an anti-inflationary nature. Also like all the money printing, right? All the money that is being printed, and probably this is not even like the end here. I mean, it needs to flow somewhere. So this is why I also think also the traditional markets will keep going up. And yeah, I think in addition, and this actually also applies to alts, is the cool thing is it's easier than ever before to access crypto, right? I mean, PayPal even started to integrate major cryptocurrencies and also like the major alts. Also Robinhood, which is obviously super trending lately, especially also amongst like the younger generation. And so I think we will still see like some of the institutional FOMO, and like maybe even Tesla keeps accumulating Bitcoin themselves, right? I mean, we all know that MicroStrategy didn't just like buy once. And so I think this is like a trend that can still continue. And yeah, then as always, I mean, I believe a significant portion of that money that is flowing into Bitcoin will again end up in alts and promising movements and technologies like DeFi, or like especially like also the Polkadot ecosystem projects, which is super interesting right now. And I mean, we have seen it in 2017, and there's always like a time lag between Bitcoin and altcoins. And I think this is what we will see again. And so I believe Bitcoin is already like in the middle of its run. It will still take like I believe the bull market for Bitcoin could still last until like end of the year or something, and then altcoins will follow like with a time lag, and most likely push down Bitcoin dominance to around like, I don't know, 50 or even 40%. And I think also like talking about the institutional perspective, I think one thing that is really encouraging and really promising is that compared to 2017, retail investors have become like smarter, and also like founders and projects that are entering the market and like issuing new tokens aren't that greedy anymore. So although like we are already like twice the market cap of like 2017 or something, people still remain like conservative to some extent, and don't just like issue like cash grabs or something. They are entering the market with like already existing products or like existing user bases. And it's not like in 2017 anymore, right? Where like a white paper project raised like 30 million USD and it was still considered like a low cap gem.
Yeah, I can remember those times. This was actually a lot of fun back then for me personally, perhaps for you as well. But many people actually were not really about fun anymore because Bitcoin just decreased about 90. Actually, it was 84% as far as I can recall. Of the maximum drawdown from the peak to the bottom of 2017-18.
Yeah.
But I'm actually just displaying the chart right now of Bitcoin market cap, put against or on top of the crypto market cap, right? And we are seeing really, really big numbers. And the total, this is actually the entire total market cap, right? So it's Bitcoin and then altcoins combined.
Yeah.
Bitcoin actually is about, for its dominance, stands for about 60% of the entire market capitalization, right? Which means that about 40% of the entire, size of the market money-wise is allocated into crypto, into altcoins, of course, right? And this tells me like a couple of information pieces. Firstly, I could see dominance going down, which means that there is overall increase in the capital, per allocated in the market per the market cap as a whole, right? Which I'm referring pretty much like to this curve, of course, which is mooning. But it also tells me that the capital is flowing steadily but surely to altcoins.
Yeah.
Right? So you could see that the entire market cap increases, but the dominance decreases, which means that altcoins are actually getting strength against Bitcoin to some extent, right? And it's not necessarily a global sort of like a thing just yet, a global per let's say the whole crypto altcoin market, but it's starting to awaken. Like this big giant, this monster is starting to awaken, right? It's starting its awakening. And like even if you compare, of course, excluding like inflation itself, you see that we have pretty much like already long time ago broken out above 2017 highs per the market cap itself, for the altcoins, which are represented by the candlesticks in here, just out of this choice. But the most important information is that we are watching at the expansion, the aggressive expansion. We are looking at the aggressive expansion on the markets, and this regards both Bitcoin and altcoins. So, which tells me the information that holistically, just from the sort of like a top view, the entire market is sucking in like a vacuum the mainstream. This is slowly building up the mainstream momentum, and this is the next thing that I also want to touch upon. And let's just, for example, switch the chart itself for a second. I'm just going to display the chart that I perhaps also like to, just hear some thoughts of yours. Not sure if you're aware of this one.
Yeah, this is on Twitter already today.
yeah, I dropped it a couple of times. This is for all the new viewers. This is NUPL, net unrealized profit and loss, okay, from Glassnode. The on-chain data also, just combined, just brings you the information on, let's say, how much wealth, is being stored on certain wallet addresses. This is all a public ledger, so you can just tell that. You cannot necessarily know perfectly, who that wallet owner just is, but how much more money and wealth they pretty much like store, right? And historically, anytime that the annual realized profit and loss, which is the measure and the actual sort of like an index of how much money is being left on the table. And this has a couple of sort of like effects on the market. This has to do with the prospect theory, with behavioral finance, and the perception biases. People generally follow something that is called a saliency. And saliency from the behavioral finance point of view is when you don't because something didn't happen in the past couple of days, weeks, or years, you'd expect it would never happen. So, right. And that's the reason why people never buy flood insurance until their home is flooded, right? You never expect a correction as long as, the market keeps going up, right? The correction isn't like, everybody who's been, here for a long time knows that there's going to be another bear market and another bull market after this bear market and so on, because those are the nature of the cycles. But many people will become, are becoming, just more and more certain that this market is going up only, right? Just like with the like Dave Portnoy the other day with the stocks rally. But most important point is that if we just take into consideration, into account, the typical sort of like a topish points throughout the history, which means that when this is marked as a euphoria, when the net unrealized profit, when there is the biggest amount of the money being left on the table unrealized, this tells you about the sentiment of crowds, that they are extremely certain they will refuse to take profits because they believe it's going to continue, right?
Yeah.
And the truth is that, again, nobody expects a correction until it's too late. But when it's too late this time, this is going to be, in my opinion, more dramatic than it was in 2017 because the market is bigger, but it's still securing the same volatility. So, a long story short, we are in the final phase. We're in the final phase, in my opinion, of the acceleration of the bull market. But this finals phase doesn't mean that we, just reverse to the bear market in the next week or next month. Instead, it means that the volatility is about to soar. The volatility, we're going to see $10,000-$15,000 candles, in my opinion, pretty fast, pretty soon.
Yeah.
and this is going to lose so many people, to like take the money of them, right? And this and net unrealized profit and loss is the amount of money left on the table, which is the liquidity pool for the institutions. So institutions cannot end the bear market, or the whales cannot end the bull market and start the bear market. They cannot exit the market efficiently as long as they don't have enough liquidity. So what we are seeing right now is we are seeing, Elon Musk accepting Teslas, and guess what? I'm going to buy a Tesla with Bitcoin, right? So he's not only just sort of like opening up. I don't believe he made an investment at this high prices because he's the richest, Forbes 100 person, whatever, because he knows exactly how to buy the dip and sell the top, right? Because he's responsible for those. So he's not, if he's investing in Bitcoin, at 12x or 14x after it's made, since last year, not even that, then it's not for the investment purpose, but it's business. And I'm going to buy a Tesla with Bitcoin. So he is going to earn money of it, right? You're going to see Apple Pay already done that, right? You're going to see Microsoft, Google, like Amazon, Alibaba, all of those bigger, just Lamborghini perhaps, right? You're going to see many of those different just new market shares being discovered and unlocked. But most important point I want you, Simon, to perhaps touch upon and comment is, first of all, what is your comment over that? What do you think from the institution's point of view, from the Moonrock point of view? Of course, this is not a financial advice, but more like your personal opinion, your point of view.
Yeah. Before answering that, I want to emphasize that obviously no one can predict like the perfect top and the perfect bottom, right? So please don't pin me down on that, except I'm right, of course. But yeah, I know. Obviously the market is super bullish right now, and many are already in euphoria, right? Which always gives like this bubbly feeling and some anxiety that the market is about to pop, right? And I don't know. One thing is like the technical analysis, and the other one is like the fundamental one. And I think like the fundamental developments really speak for like a continuation of like the bull market for at least to like a certain extent. I would say, I'm still expecting like Bitcoin to peak somewhere around like 100 to 150K, and then we get like a altcoin, like a time-lagged altcoin run, like as we have seen in 2017. But yeah, obviously I'm not like delusional, and I agree with you. And there will be like another bear market, and there will be like another bubble burst. But I think like the great development this time is I think the bear market won't be as harsh as like the last one has been, right? I think
You mean for the drawdown?
Sorry?
You mean for the drawdown, for the downside effect?
Yeah, I mean, this is actually what we also see in this chart, right? I mean, like over the years, it gets less and less, and I think this is also what will happen this time again. I think given that we have like way more adoption, and also like that I mean, it's not so much only about the price, but also like about the evolvement of the space, right? I mean, in 2017, it was only white papers. Now we already have like functional technology and people like projects launching the products actually live already. People are using it, DeFi protocols that actually work, right? And this is why I think this time it won't be like that harsh of a correction, right? I mean, it will still be like pretty painful, but it won't be like 80 to 90% like last time. I think rather like maybe 40 to 50%. And I think this is the cool thing about it. And the more adopted the space becomes, and the bigger it grows, the less volatile it also will get.
I see. That's actually a very interesting way to view, from your side. I'm actually thinking.
I'm talking like complete bullshit here, but
No, that's fine. That's fine. Listen, only God knows, what's going to happen. Just like you said, nobody knows where it's going to peak. If it's going to go up, downwards, back and forward. We can only. Nobody knows if the planetoid crashes Earth in about a week and we all die. Nobody knows that, right?
But yeah, completely. But I completely agree with your view as well. And I think this is why it's also like super important to always combine like sentiment with technical analysis and also with fundamental analysis. And then I think if you're taking like all of these into account, then you should just like everyone should just like have their own view on like the whole topic, but based on like actual research.
Yeah, knowledge is power. Knowledge is power. The information asymmetry is what makes you money. If you know things better, faster, then you're going to make money of those who actually lag behind you. And I actually could only partially agree regarding the drawdown. I mean, again, nobody knows what's going to happen. I believe as a technical analyst, as a certified technical analyst, I choose to believe that the great history is the greatest teacher, and that our human behavior, is exactly what rallies those bubbles to go some unprecedented amounts of, excess multipliers. But it also is exactly what draws down Bitcoin and those bubblish sort of like assets after bursting, usually on average about 80%. That's also what Peter Brand, as far as I'm concerned, also sort of like suggested the other day throughout his 2017 or 18 prediction over the bull market peak, right? Which he pretty much like quote perfectly. And it's actually a fact that most of the bubbles, they retrace heavily, right? So I personally would be, you should be ready for the worst. And if the best comes, you're ready anyway. So if you're ready for 80% or 90% decline, then you're going to enjoy 50%, right? So that comes out of question.
But I mean,
Simon,
I'm just curious. I mean, given like you're mostly into technical analysis, I mean, what is your view then, like on like where Bitcoin is going to peak? And when?
Yeah, I mean, you actually worded exactly what my thoughts are. Those like I almost feel you're like read through my charts because we think alike. We really think alike. And I do think, Bitcoin is going to see the peak around 100,000. I don't know where it's going to happen. I think 100,000 is like it's a big milestone. It's a psychological barrier, but of a much bigger extent than, let's say, 50,000, because it's like a level up. It's like becomes, becomes six-figure number all of a sudden. So it's like a complete, milestone, generational milestone. I don't think we're going to see that this easily. If we see, well, I'm fine by me, right? I'm just going to make so much more money, but what I'm trying.
I mean, I think people also need to stay realistic, right? And I mean, let's say we will reach 100K, then I mean, we obviously went up tremendously, and then like an 80% correction is also completely fine. I mean, how can you complain about like finding support at 20K or something, which was recently the
exactly
all-time, right?
Exactly. Yeah. That's actually interesting. And apparently, Bitcoin rarely ever just goes down, to the levels. If you compare, of course, this is logarithmic curve, right? But you would see, 1250 peak of 2013 and 3120, right? Per 2018 bottom. So here it's like this gap that is apparently on the emerging markets highly sort of like, just emerging markets like crypto is, the Bitcoin is. This is building up the demand, right? This is building up the demand on the bottom, which usually does not let those supports to be retested. So if this was the all-time high, then TA would suggest that perhaps, we're going to need to accept Bitcoin, in the future. I don't know, perhaps we're going to see Bitcoin, just being extremely cheap, somewhere below, 20,000. If we ever get 10,000 again, I don't know, right? But that's actually going to be a good game to play and to observe.
Yeah.
But I couldn't agree more. I think that because like the bubbles, right? If there is every cycle starts with some depression, the disbelief, right, and then it starts participation, acceleration, and for Bitcoin, this this is how those bubbles look like. And the bubbles, they are the most volatile. As I said, those $10,000-$15,000 candles, they're going to appear, I think, within a day, upwards and downwards. And this is going to build up the liquidity for the whales to exit, because the institutions only were worried about not giving away too much money of the profits, right, on the table, like off the table to the market in the slippage coming from the market sales, right? So I think, I think in general, we are somewhere around here, right? We are somewhere right about to see this biggest volatility. The biggest sort of like, the aggressive marketing campaigns are going all around the world right now. As I said, the mainstream distributors per like Tesla, Apple, Google, Amazon, Microsoft, whatever, right? You're going to see more of that coming, right? And this is enabling new market shares. This is reaching out to the mainstream, and this mainstream is needed for the liquidity reasons. So I'm not, I'm almost sure, Elon Musk knows perhaps perfectly what he's doing with his money, right? And I'm quite sure he invested way before Bitcoin itself, right? Because unless he doesn't care, right? Then who knows?
Which could also very well be with Elon Musk, right?
Yeah, exactly. This is just, he lives off memes, so you never know. But Simon, with all that, being said, I want to just very quickly lead to one of our last topics, for today, because you are a very busy person, and I definitely want to fully appreciate your time and generosity. And I'd like to talk to you about your view, your perspective over the new sort of like a monetary system that apparently is slowly becoming reality, right? I'm referring to ensuring inflation. You wouldn't see that in the news, in the media stations, but inflation is actually increasing, which is additionally supported by the increase in the commodities markets, right? What WTI, what the oil does. What the gold, silver, gold, of course, is sort of like confirmed to be manipulated, but silver has just also awakened. It's just, like a couple of months ago, it broke out above 7-year long accumulation in a perfect, beautiful breakout. I actually bought more gold and silver yesterday, by the way. And what are your thoughts of I wrote it down as the Industrial Revolution 4.0, right? So the digital economies, and actually its participation, or DeFi participation in those terms. Like, what are your thoughts?
I mean, I mean, there's actually like no doubt that we are living in the age of digitalization, right? So industry 4.0 and like the digital economy are definitely a thing, and much more than just like a meme or like a narrative or something. In my opinion, when it comes to the future of finance, we are already like seeing the first baby steps of like it actually being digitalized. With DeFi and the adoption of Bitcoin as like a financial instrument. And what I think is like pretty important here is that like while decentralization might not be like a key factor to most people entering DeFi, they will quickly realize how much more accessible things actually get like with decentralization. And I think this is like a pretty important topic. And so I think DeFi is already like a great step when looking into the evolution of the internet, and therefore like a big part of the economy 4.0. And I think like funnily, this is actually also like what we saw to a certain extent with the recent hype around like Wall Street bets and like the scandal with GameStop being listed from Robinhood. And so finance being handled by like a few centralized parties like always has been like a big controversial topic, right? And this is what crypto was born for. I think this is just like something that people have to realize and wake up to. And this is like a process that will happen like rather slowly but surely. And yeah, I mean, also like from a non-crypto perspective, I think like assets will just like be like digitalized in the future, or also maybe like governments issuing like their own regulated digital dollars or like digital euros or like whatever. I think it's definitely like the future of finance, and it's just like a matter of time until like these old concepts are like basically dying out. Well,
It's actually sorry. It's actually
because I just fucking hate cash.
Oh yeah.
It's horrible.
Yeah, I feel that. I mean, cash itself, is of course like bearing the inflation mark. But what I want to say is actually, I'm in close collaboration with Waves Protocol, and this is one of the biggest projects. And what they do is actually, I'm speaking regarding to the digital currencies, and not cryptocurrencies, but the digital ones, the national currencies. And you're going to see digitalized versions of the regular currencies under the DeFi, the centralized sort of like a forex, right? And you're going to see the sort of like a stable coins versions of dollar, of euro, of British pound, right? Of yen, of all those, Brazilian currency, for example, right, as well. So this is already sort of like in the development. This is already in the process. So I couldn't agree more, but most importantly, what's sort of like the most disturbing, I think, is that this digital economies, those revolutions for zeros, DeFi like will definitely help many people become rich. But what I think personally is inevitable, and I want to also hear your thoughts on that, is that this full complete invigilation, this full complete like a bank control over what we are going to see, because the inflation is killing the cash. In my opinion, we're not going to see cash anymore in about 10 years from now. The cash is going to like literally, slowly hyperinflate until it's literally like fully devaluated. That's also sort of like confirmed to be a strategy of getting out of debt, like paying out the debt in the inflationary terms by devaluating the debt itself. And do you think it's really this pessimistic as much as I do?
Yeah, I think so. And I think like cash will die out completely with you. But I mean, sadly, I also believe that because like blockchain and like basically digitalization of like fiat actually is like a perfect instrument for the governments to further control the people, right? I mean, like money is basically their most powerful instrument, and I mean it's so easy to like money laundering is like so easy with cash actually, right? And I mean, if this doesn't exist anymore and they have like full control, like they can everything see, they can see like everything on the blockchain, it's like fully transparent, and they just like increase their power even more and their control. And I think this is what will happen. And I think this is also why regulation is still like a pretty tough topic for crypto and like DeFi. And I think people have to be realistic about it, that we will still get like pretty heavy drawbacks when it comes like to regulations. And I mean, people can prepare like for very bad news, I guess. But yeah, this is just like risk management that you need to have in place.
Yeah, I couldn't agree more. Simon, I mean, you've been so generous with your time and with your knowledge already. We have this beautiful custom, on the Nest Show podcast that we share. Our guests have the chance to share their sort of like a final message, final takeaway tip that they want to leave our listeners with. What would it be for you?
Actually, I would say never burn bridges, right? Because regardless whether it's like in crypto or just like in real life, I mean, valuable contacts are basically everything to make it. And it will always like circle back like badly on you. So just try to stay like super kind and like basically generous to all the people, and eventually it will come back to you.
I love it. I love it. I love it. I love it. Yeah. I love it.
Yeah. I mean, I have to admit that I had to learn this the hard way, but this is like priority for me now, like definitely.
Yeah, I mean, I repeated that a couple of times that I love it because I love it in the first place. But this was also sort of like a trying to resonate it within my head alone, because at times, for example, that perfectly well as well for running this big account on Twitter, which I highly encourage everybody to visit and to put follow on Simon's account, which goes under @scoinaldo. scoinaldo. So make sure to put a follow on his Twitter account. But the big account is also sort of like a big responsibility and big headache too often. And at times, I'm really just sort of like running out of patience when I see, when I see some comments. I mean, it's pretty crazy.
Yeah, I mean, I can only imagine how bad it must be for yourself, right? Like, I mean, you obviously have like a way bigger account, but I mean, the problem is you just can't please everyone at the same time. So I started to accept this, and I mean, there will always be haters, but on the other hand, there are always like people who really appreciate what we do, and this is also like super great to see, like always.
Yeah, very true. Ladies and gentlemen, Simon Dijic, managing partner of Moonrock Capital, blockchain crypto enthusiast, Bitcoin and altcoin trader, has been our guest today. I appreciate your time, Simon. This is a great job, great podcast. Thanks for that.
Thanks so much. Well, it was great to talk to you.
Awesome. I appreciate it.
Globe is a crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts with Bitcoin collateral. Sign up today at thebirbnest.com/globe.
I'd like to thank our listeners for joining this episode of The Nest Show. If you've appreciated the depth and breadth of what you've heard with us today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us at thebirbnest.com/discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We always appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. This podcast is brought to you by the Birb Nest. Thank you, and trade on.